Hello everybody, welcome to another Pepperstone Learn It Live webinar. Tonight we're going to be covering a topic close to many traders' hearts, and that is how to get started with scalping. My name's Thomas Atkinson from FX Evolution, and as always I'm joined by Tyron Avella.
Hi everyone, and welcome to everybody's favorite, the scalping techniques. Everybody loves them. Old traders, seasoned traders, and new traders. So looking forward to getting into some of the strategies that we use and that you can use basically in all of the smaller time frames.
Exciting because a lot of people we all start there, don't we, Ty? I mean, it's where we started as well, all that time ago. So going to be an exciting one tonight. Okay, just to get started, we need to go through a risk warning. It's very important that everyone understands that these videos are provided, or the information provided in these videos has been produced by a third party and does not reflect the opinion of Pepperstone, and the information has been provided without any alteration or verification and is only general in nature. So of course, seek financial advice whenever necessary. So, a little bit of housekeeping tonight, Tyron. We've got an exciting announcement. I'm not sure if this has even been announced anywhere else, but upcoming news at Pepperstone, share CFDs will soon be tradable on the Pepperstone platform at MetaTrader 5. That's really exciting for us because we really love trading shares, and that will be a July 16th launch, I believe, this year. So it's just around the corner, which is really exciting.
That's going to be really good. Look, a lot of people who haven't traded the stock market before, they're going to be able to have the opportunity to use their currency skills in the stocks if they choose to, and we highly recommend that you do, because the stock market is a great place to trade. And if you've mastered the art of trading in the foreign exchange markets, the stock markets look like they move in slow motion compared to them, and all of the same techniques work just as well, if not better. So we just cannot wait for this, so we can start using some of these examples as well in some of our presentations. Very, very exciting.
A few other things to note: top quality US shares are going to be available at the launch in after hours markets as well, which is really cool. So it means that you'll be able to actually trade them when it's not traditionally the market being open, which is really, really excellent. And of course, lightning fast execution speeds for people that like to scalp. And because tonight is all about scalping, it should be good to see people going long and both short with those stock positions. So that'll be very, very cool. So what are we going to be covering today? We're going to be taking a look at a few different things. So one of them is just a general topic of how to become more successful in scalping. So some of the things we've learned, some of the things and tips and tricks that we can give you guys, and that comes from quite a few thousand hours in the charts over the years. So we'll definitely deep dive into that. We'll also be taking a look at different types of scalping strategies and how to follow a rules-based approach. Really important when it comes to scalping, because it's many opportunities. You need to be very disciplined, and how to lower your trading risks when using a scalping strategy, and of course our Q&A. So if anybody has questions or they want something answered, we always try to answer those at the end of the webinar, and feel free to pop them in the questions window and we'll get to them when we can. So let's begin. What is scalping? So scalping is really a trading style that specializes in taking profits on a small price changes. And I'm sure many of you guys are aware of that already. It's really time intensive as well, and chart intensive. So we need to be aware that if you scalp, I guess, more the Asian sessions, then it might be a little bit slower and not as much movement, and can be a little bit boring, I guess some people would call it. But if you scalp market opens and before market opens, e.g. London Open or US Open, they can have some of the best times for scalping. I mean, Ty, what do you think about trading opens with scalps? It's really good, isn't it?
It is definitely. I mean, look, the London Open is definitely the most active. Like we find that the majority of traders that we work with are generally trying to trade that London Open, or sometimes even the European Open a couple of hours before. The market is very, I guess it's very liquid at that point, so you can get in and out of trades, quite quickly. The New York Open, for those of you who can actually stay up for the New York Open, or even during the New York session, I find actually is the steadiest, even for scalping, because the market moves in really, really nice patterns and waves, especially when the other markets close. So once London does close and the European markets close, and the US is the only market in the world open, I find that's just the most beautiful time to trade. I don't do it anymore because I've got 2 young kids and I don't stay up all night. But in the past, when we were actually looking for the best time frames, it was definitely the one to go. And I used to wake up at 2 o'clock in the morning and just trade for those 3 or 4 hours, and just take the rest of the day off, because you could do so much quality trading in that time, because the market is just really, really smooth, and patterns really plan out the way they probably should, because there's not. The problem with too many world markets being open at the same time is you can often get a tug of war type effect where it's a war of attrition as to who's going to win the long or the short on some of the major pairs. But when the New York one is the only one open, generally the directions are quite, I guess, distinct. So you can basically work in the direction of the trend a lot easier without the volatility really playing up.
So I guess we'll be breaking it down to steps, and that is that we need to understand what type of scalper we want to be. I actually think scalping has a place for all types of traders out there, because certain market conditions, when you recognize them, play very well for scalping strategies. So you can either decide to be a scalper as a primary, or maybe as a supplementary style. And what that means is, if we're a primary style scalper, we'll need to spend potentially quite a few hours in front of the charts on multiple days per week. Traditionally, I guess the Tuesday, Wednesday, and Thursday nights and days have been the best scalping days for us in the past, and that's just because all of the markets are open and you've got a lot more volume and a lot more trades going on. You also then need to think about, well, what about supplementary style scalping? So where we might recognize certain favorable market conditions, like a range bound market on a larger time frame, and then we can come in and we can start to adapt our trading style to take advantage of these situations. So that's definitely something that we want to consider before we even decide what type of scalping strategy we're going to use. Do we actually have the time that it takes to become a scalper and to put the hours in? Because you really do need to be sitting there for a 2 to 4 hour window, multiple days a week, to get the most out of our scalping. Would you agree with that, Ty?
Yeah, most definitely, and look, that's why it does only suit certain individuals that have got the time to be able to play that. But that said, good scalpers can make an extraordinary amount of money in a short space of time when you're good at it. But it is really a lot more of a numbers game than the traditional swing trading and the longer term trading. But we'll touch on some of those as well as we go through the evening.
And for everyone out there, we will go into some charts as well. So we'll actually go into some market charts right now and take a look at those throughout this webinar, so you can see some
right now.
Yeah, exactly. So step 2, we want to look at those market conditions. So one thing is the market range bound or trending on the larger time frames. Easiest way to really figure out whether a market is range bound is to recognize something like a channel pattern. If you recognize a channel, then it's very highly likely it is range bound. And you can either do that on the smaller time frames or the bigger time frames and then break it down from there. We also want to choose the timeframes for our setups, such as the 5, 15, 30, and 1 hour timeframes. We generally suggest these kind of ones. I like 5, 15, and 1 hour more for maybe the patterns. And that is just because I find it smooths our entries, gives us a little bit more wiggle room with our take profits and stop losses, which a lot of people do have problems with. And the 1 minute chart, we all love it, but at the same time, I think the 5 and 15 kind of give us better opportunities, and that's what's most important. You want quality over quantity a lot of the time. And of course, we then want to spend time learning the way the market moves and the time of day the currencies react to different news events. So think about it, if we're trading, let's say, the pound US dollar, it's going to have a lot more movement on it around the London Open. The US dollar yen is going to have a lot more movement on it around probably the US Open and also the Asia Open. So just be mindful that if we're trading certain pairs, what time of day is it? Check out that main currency and see what time of day it is over there, because you really want to be around those opens for scalping it. It's one of the best times. So before we look at the live markets, let's talk about a channeling market, because this is going to be really important for our scalping strategies. So I'll bring up all of the chart here, and you'll notice that if we had a line chart, it looks like this market is basically range bound. We've got the resistance up here, where the market can't get past, and then we've got the support down here where the market can't get past. So basically 2 levels, and it's trapped within those. So let's say it did break to the upside. What could we do? And this could be any time frame. It could be a 5-minute, 15-minute, 1 hour, daily, weekly. The principle is the same, and therefore you can use it across all those time frames. When it does break to the buy side, we'll probably want to place a buy market order or potentially place a limit order of some kind when it comes back and tests, and we'll talk about that soon. And then we set our take profit for the range of that area. So let's jump into the charts and actually take a look at the euro pound right now. So here I've got a line chart. It's a 15-minute time frame, so quite a good time frame for us scalpers out there. And you can see that I've just drawn 2 horizontal lines. I'll just highlight all of this stuff up for everybody. So we've got our kind of resistance point and our support point. And you can see that quite a few times it's touched. And Ty, I mean, we like to see that the market's touched multiple times before we decide that a market might be range bound or at a channel, don't we?
We do. We like to see, ideally 2 touches on both the support and the resistance. And I mean, look, we did have a question here just regarding the time frames that you're looking it out for. Yeah, so we are looking at, in a perfect world, look, the bigger the time frame, generally the bigger the range it's going to be. Okay, so we can see here on a 15-minute chart, and let's measure this. So what do we got? We've got the we'll do a quick measure of this channel, because that's really what gives you the idea of what your take profits are going to be. So what do we got there? That's
20. Yeah,
20 pips. Okay, so we've got a 20 pip channel here. So any break of this channel, we can generally expect that we're going to get a 20 pip take profit area, which is for scalping terms not too bad, especially in the shorter term time frames. That can happen very, very quickly, especially if it's happening in one of those opens that we were talking about, like a 20 pip movement in the London Open is that could happen in a 1 minute candle. We've seen it plenty of times. So I guess you're not in the market for a hell of a long time, which is a good thing for scalping because it is an in and out sort of strategy. But look, the beautiful thing about channels is not just that you're looking for the break either side, you also get the opportunity in a range bound market to be able to trade inside the channel. And sometimes they can be the most solid of trades because, for one thing, you've got a very clear take profit target. So if we are buying at this level here where we've got this tick, we know that this is probably what we're expecting this market to do until we get that break. So you don't necessarily have to, once you've got 2 touches on either side and you've got a channel that's drawn and that is clear, there's nothing stopping you scalping up and down that channel until you eventually get the break. And that's the beautiful thing about it, is that you don't have to sit there and wait for that long-term time frame to actually break a particular zone. And it may not break for hours. So there's plenty of trading opportunities inside that with very clear and distinct take profit and stop loss zones.
Here's a great example here, Tyron. It's the engulfing candle that we see coming off that support. So once we'd analyzed that this may be potentially range bound, or at least this is very good support based on these multiple touches before, you can see this engulfing candle on the 15-minute time frame. And that is a very good go signal for us to potentially say, okay, let's look at scalping this to the buy side. Let's then place our stop loss below the lows down here. So in this case, we'd be looking at about an 8 pip stop loss, very normal with scalping kind of trades, and be looking at around a 15 pip take profit max. So probably about 14, 15 pips. And that's the kind of risk reward you often do get, at least initially, with these types of scalping methods. So hopefully everybody can see that. But if you're not sure what an engulfing candle is, definitely look it up. We've covered it in many of our webinars. Hammers, shooting stars, engulfing candles, that type of candle confirmation, very, very, very strong when it comes to scalping methods. So that's what we'd be looking for inside.
Definitely. Now, the one thing you want to be mindful of as well is that if you were on a 15-minute chart, look, you're going to probably get a channel like this that's going to go basically 15 to 20 pips, maybe sometimes 30. But if you were doing this on, say, a 30-minute chart or a 1 hour chart, you're going to find that those moves are going to be a little bit bigger. Okay, so even though you're trading the exact same strategy, the moves are going to be significantly bigger because the time frame is bigger. So the take profits are generally based on the time frame that you're in, because the ranges are usually, you're not going to generally get a very tight channel like this on a 1 hour chart that only spans 20 pips. It's probably going to span, probably closer to 40 or 50 pips most of the time, because it just, price is very rarely contained for that amount of hours in that very tight time frame. So you just have to be very mindful of the time frame that you're on, and that's why the expectation is good, because it's predetermined. So now I've got quite a few questions here on what our moving averages are.
We'll cover that soon. We'll cover that.
Yeah, we'll cover that shortly. But just very quickly, the green one is a 200 SMA, the blue one is a 50 EMA, and the red one is a 20 EMA. And we'll talk about why we use those ones a little bit later on in the webinar.
Okay, so let's just get back into the charts, but hopefully everyone can see channels, their power, multiple ways you can trade them, either within the channel, or when it breaks through. And there's a few other things that we can bring into this type of trading strategy as well, which we'll talk about soon in the terms of role reversal, that can strengthen our trades while looking at things like channel or range bound markets. So this is just one way that you can scalp the markets, at least from the base. Okay, so another type of pattern that everyone will want to learn and is definitely very, very good in scalping, 5, 15, 1 hour, as Tyrone said, it doesn't matter what time frame, is double bottom and top patterns. So this is where basically the end of a trend happens and the market thinks about maybe a support level, it finds it again and is unable to break to the low in the case of the double bottom, and then it breaks to a new high, breaks what we call the intervening trough, and that's what these kind of patterns show. And again, the distance or the take profit, the nice thing about these types of things with scalping is we know the distance from up here to down here is what we're going to be looking for in terms of the take profit. Another benefit of double bottom and double top patterns, if you find them in the right areas, they can give you very high reward to your risk. So often in scalping, we may only see a 1 or a 2 to 1. Sometimes with these types of patterns, because of what the significance of the zone is and the significance of the pattern, you might be able to get up to 5 or 10 to 1 types of trades by following quite a few different moving averages and other things we'll talk about later in this webinar. So I really love these patterns, and again, you should do some research and start to find out more about those types of things. So straight on to the moving averages, Ty, something we've got so many questions in the room tonight about. These are kind of the ones that we like to use. So we like the 5 and the 8, the 20, the 50, and the 200 SMA. Now we use the 200 SMA for a few reasons Tyrone will explain in a minute, but basically the 20 and the 50 EMAs are our two best friends. The 5 and the 8 are great, but the 20 and the 50 are very, very powerful. And we'll actually take a look at some market examples soon, why the 20 and the 50 are so great at following scalping trends. So Ty, why do we use the 200?
Okay, so the 200, it generally, it comes down to really the stock market again, actually. The 200 is one of the most popular moving averages in the world, and it's been used in history for a very, very long time because it represents obviously a significant amount of time, or most of the trading year and trading days, really. And we use that, that's the only SMA that we actually use. So you'll notice that we use exponential moving averages for all of the others because we want that dynamic movement in the market on the smaller timeframes. But on the 200, we keep that as an SMA because that's the best smoothed result. So we find that one, and price actually interacts with that one better than it does with the EMA over that distance. Now, the reason we carry that down all the way through the smaller timeframes is because basically it's just the weight of numbers. So many people actually use the 200 because it's one of the most standard moving averages that there is. The power of a moving average is actually in the people that are looking at it. So the more people that are seeing it, the better it's going to be, whether it's a support zone or a resistance zone, depending on what you're using it for. The more people that can see it, the better it is. Now, for those of you who don't know, the numbers actually carry forward. So if you change your charts between 5 minute, 15 minute, and 1 hour, and so on and so forth, those moving averages automatically adjust to the candles on that chart. Okay, so on a 15-minute chart, the 200 is going to represent the last 200 15-minute candles. And if you click it on an hour, it's obviously going to represent the last 200 1-hour candles. Okay, so that is a very standardized thing that all platforms do. So we don't change our moving averages. We've got a 5/8 EMA here. That is only a scalping strategy EMA crossover. So we will talk about the crossover strategy shortly, but that's the one that we use only for scalping. When we're looking at our swing trading and in longer term timeframes, the 5 and the 8 aren't even on the chart. Okay, the smallest we go to there is the 20 and the 50. But the 5 and the 8 are a very dynamic, the Fibonacci numbers, as probably a lot of you already know. That, again, is a very standardized thing, and that's why they seem to work so well, because a lot of people see it. But they are very, very good at the crossover. So when the 5 crosses the 8 from below to above it, you go long. And when it goes from above it to below it, you go short. And especially when it's at a key zone, like we were talking about earlier, whether that could be at the bottom of a channel or the top of a channel, or even sometimes in the middle of a channel. It can be a very, very strong signal. It's a very, very popular scalping strategy because the moves out of those 5/8 crosses, especially on a 5-minute and a 15-minute chart, can be very explosive, and they do generate sometimes 4 and 5 to 1 return trades. So they're very, very good risk reward trades.
Okay, so let's talk about optimizing our entry. So one thing that's really important is to enter based on confirmation, not on gut feeling. And this is one of the most important things when it comes to scalping. So always make sure that you have confirmation. Like we mentioned in that range bound market, I highlighted that little engulfing candle because that would have been a very good confirmation that bottom support level was being respected and that the market was moving in the other direction. So always make sure that in your scalping method, you have a confirmation triggers and those confirmation triggers are followed. Too many people fail at scalping because they don't wait for proper confirmation. Another one, don't try to break even your trades with fixed pip amounts. It's a little bit harder in scalping because I remember when we started Ty, we loved just using like a 5 pip break even. In fact, we had a little system where it would break even the trade 5 or 10 pips up, and it would just lock break even every single time. It's really important to try to get into the habit of breaking all of your trades down to percentages. So if you can do that and you only take one thing out of tonight's webinar or today's webinar, for some of you out there, make sure you try to break your trades down to percentages when you talk about profit, losses, and also break-even points. And what I mean by that is, let's say we had a trade, not all trades are the same. One trade may have an 8 pip stop loss and a 20 pip take profit. What we want to do is we want to use a percentage of that take profit that we're looking at, let's say 20 pips, and we will say, okay, at 75% or 60% of that particular trade going in our favor, we'll break even the trade. We work that out, and every single time, if it's up 60% of what we expect or 75% of what we expect, we break even at that point. But we don't just break even because it's 5 pips up. So it's being market adaptive. All right, another great strategy when it comes to scalping, role reversal. We talk about it all the time with swing trading, but it's really excellent when it comes to scalping as well. So role reversal is where resistance becomes support, and I've got a great example of this on the Aussie today and how it works. So resistance has become support. Basically, it shows that when the market breaks to a new high or a new low, depending on which way it is, that it is respecting that previous level. So let's see how that actually plays out. Here's the Euro 4 hour. It would be the same if it was a 15-minute or a 5-minute chart. You can see the resistance points over here, and when it breaks, it comes down and tests that level. So imagine if we were scalping off this level and we were saying, okay, we'll buy here, we'll sell up here. We'll buy here, we'll sell up here. We'll buy here, we'll sell up here, that kind of thing. If you continuously just follow that across, you'll notice that eventually it will generally break through. And if you choose to maybe leave a little bit more of your order on, or percentage of your order on, you can get some really great risk reward kind of trades in there as well. So we'll load up that Aussie tie, because we were talking about this before, and I said, there it is, the example for tonight's webinar. So here we have the Aussie USD. Love this one. And we can see this massive, big, nice candle on the 15-minute chart where probably some news has come out. It's gone about 37 pips. It's then consolidated, as it often does. And you'll notice that when this kind of news does come out, it will consolidate after, and then it will continue hopefully in that direction. Got that nice resistance, that break of the resistance, which some of you may have been involved in. And then we've got that retest of the zone. So one thing we love to do in scalping is we love to see this multiple resistance points, and then the market has pulled down, tested that area, and guess what? It's that candle again, that engulfing candle on the 15-minute. So what a perfect place to go long, place our stop loss below the low here, and then of course already we're well over 1-to-1 up. And in fact, in this one, you could probably go back and have a look and you would say, okay, well, where do I think this could be potentially going? I mean, the 200 on the hour makes a lot of sense where it is right now, or even up until these kind of points here, this kind of 70 level, which is a very big psychological number. So quite a few different options, but hopefully everyone can see the power of that role reversal coming through when it's so clear.
Yeah, when you're doing scalping strategies, role reversal is just so important because the smaller time frames. Look, role reversal, by the way, works in every time frame. So no matter what time frame you're looking at, it's all going to be relative. Obviously, how strong that area is going to be relative to the time frame that you're on, as with everything in these scalping strategies. But you are going to. The good thing about it again is you're having very clear and distinct take profit levels where you should be thinking about taking your profit. And that's really, really important in scalping because it is a numbers game. And you don't want to be tricked into thinking that you're going to make hundreds of pips on a scalping entry, because that's generally not the case. I mean, yes, sometimes the market does explode from that area and not come back. That is true, but that's not what a true scalping strategy is trying to do. What you are trying to do is many trades and capturing those 1-to-1 and 2-to-1 trades, frequently. You're not after that big, 20-to-1 trade, which definitely sometimes happens, but that's more probably, a little bit of luck more than anything else. If that's what you're looking for in your scalping strategies, you're not probably really scalping. You're probably more swing trading to interim, long-term trading, without really knowing it.
So there's a good reason we started with the euro pound, because this brings us to the same kind of concept of that role reversal. And then we start to bring things together. So initially we might say, okay, range bound market will trade, as we said before, inside the range. But then if it breaks through the range, it will generally come back and test that point. So it breaks through, may not reach our take profit yet, our expected take profit, but then it comes back and it retests this zone. And you can see here that this would be quite a strong zone that we would expect. Now, what if we saw a candle pattern, and you'll have to excuse my bit of dodgy candle drawing here, but what if we saw an engulfing candle pattern here, and then we could potentially say, okay, well, we expect it to go down here. It hasn't done so yet. Place our stop loss above here, place our kind of entry, maybe 1 pip to the break to the downside, and then we've got our really well thought out strategy there that's still a scalp. And it can be, the great thing about this type of method is you can use it on scalping, and then you can go and you can use it on 1 hour, and you can use it on 4 hour, and you can use it on daily and weekly and monthly stocks, currencies, doesn't really matter, because it's based on price action at its core. And that's the most important thing. You really want a great base for your method. Too many people out there, what they'll do is they'll just put a whole bunch of different indicators on the screen. They'll say, look, if 5 indicators agree with me, I'll take that trade. That's good and all, but they don't understand that a lot of those indicators will always be agreeing with each other. And we find that way too often, don't we, Ty? That's why we love price action as our base for trading systems.
Definitely. Look, indicators are awesome, and we are going to probably touch on them just quickly, but they aren't the basis of what we do. Price action is the most important thing when you are scalping. There's no question about that, because that's price action is really the leading indicator. It's the only leading indicator that we can use and rely on a regular basis, and it's never more prevalent than in the smaller time frame. So when you're getting the price action at the bottom of these channels and at the top of these channels, or when moving averages are crossing over, or you're at a role reversal area, they are, you know, gold in terms of what you're looking for, because that's the true indication of where more than likely price is going to go. So the idea, and we will touch on this, you know, towards the end, is actually bringing these strategies together, which is going to give you the best form of success. But what a lot of people, you know, make the mistake of doing is they actually ignore price and just rely on, say, a stochastic indicator, and basically buying when it's overbought and selling when it's oversold, and letting the indicator do the work for you. Now, look, that's a solid enough strategy, and you can certainly make money from it. But if you can incorporate that with price action candles that are actually signifying the move prior to what the indicator is doing it, and using the indicator for purely what it actually is there designed to do, to give you an indication of what's going to happen, the strategy is going to be far more powerful, and the results will surprise you at how often they actually will work out, rather than just using the indicator only approach.
Okay, I'm just going to skip over to this pound, because we're trying to bring a few things together tonight, and hopefully everyone will be able to go and watch this video again. So if you miss anything or you want to go back over it, you will be able to see it later, which is great. So I want to bring up this pound because we've got our moving averages here. We've got our red one, which is the 20, our blue one, which is the 50, and our green one, which is the 200. And one thing I want to mention, and Tyron and I talk about this all the time, another thing that you can bring into your strategies is when you start to see kind of a breakout and then multiple, like a retest where maybe multiple moving averages, as in these ones, are sitting next to each other, because that is a very strong level of generally support or resistance. So here we have our 5-minute chart, and you can see that the market obviously has stopped going down. It's found its series of higher highs and higher lows in terms of price action, and then it's come down, has tested this area, and then we'll see just over here, and we'll highlight this zone because Tyra and I were mentioning it before the start of this webinar, and we were saying, okay, this is a really nice little zone to get in on, because we've got the double cross of a moving average. Price is made above the 200, always significant, and then it's come down and it's found some support along this zone. You can see it's really blasting through now, Ty. It's going off the charts. Yeah. The beast has got its name for a reason, yeah. But yeah, there's the test of the double moving average, and that's very significant when you also find it in a key level of support or resistance. So double moving averages, support or resistance, perfect little area. I'm going to go to another chart just because I love to look at the charts. And this is another one. Look at that, 2 moving averages, previous resistance ends up being the point where it turns over and it starts selling off. 15-minute chart, by the way, on this one. And then I've got another one for you on this chart. And this is the daily. We've got the 20 and the 50. Now, of course, it's rejected through here, but this is an incredible rejection candle, a little bit higher time frame, but it's come off those crossing, or those moving averages coming together, and they're about to cross. So whenever you see that type of stuff, very, very powerful.
Definitely. Now, I'm getting quite a few people who have come into the webinar and actually missed the start of it. And yeah, and I'm actually just asking for recordings. Just so you know that the webinars are definitely recorded, and they will be on the YouTube channel in the next day or so. So just keep an eye out on those. It'll be on the Pepperstone YouTube channel in full. So if you have missed the start of this one, definitely yeah, get onto it, because we do talk a little bit more in depth about some of the things. But also, I just will mention for those of you who have come in late, and also for the people that have been here, we're running a webinar just about straight after this one for the next hour between 8:30 and 9:30, analysing the live markets in all of the different time frames. So for anybody who'd like to join us, I'll pop it in the chat window now. So you can just log in on that link and register. And yeah, straight after this one, about 10 minutes after, we'll be doing another full 1-hour webinar focusing on market analysis, and probably talking about some of the techniques that we're talking about in this one actually, but actually focusing more on the live markets that are moving in some of the bigger time frames. So feel free to join us.
Yeah, that's always a lot of fun as well. So, all right, back into what we can do and how we want to stay disciplined in our scalping. All right. Another thing we want to do with our scalping is try to aim for some good risk reward or our multiple trades. We do not want to take trades under 1-to-1. So if we're risking 10 pips, we want to take over 10 pips whenever possible, for sure. You're really hurting yourself statistically if you take less. A lot of people have systems and they might say, oh, I've got a 70% system that works 70% of the time, but I'm only getting 6 pips and I'm risking 10, or I don't have a stop loss at all. The problem with that is you might have a winning streak of 3 months or 4 months, and many people have been there, and then all of a sudden one trade completely undoes your good work. You've let it go too far, you get stressed, you stay up at night, all those types of things. We've seen it before. A lot of people unfortunately fall into this trap. You should have a stop loss in at all times when you are looking to scalp. You need to be very nimble in and out, and you don't want to be I guess it's susceptible to too many of those crazy things that can happen in the market. You would rather your trade just be taken out and you're not stressed. That's the idea of this type of trade. So yeah, sometimes good looking trades will not always meet your criteria, and that is super frustrating, but it's very important, and practice discipline. Good tip, if you're looking at the Australian US dollar, you think it looks really good, but it doesn't quite suit your needs, go have a look at the pound US dollar, euro US dollar, see if they're presenting similar types of trades, New Zealand US dollar as well, and then also maybe other Aussie pairs. So Aussie, maybe CAD, Aussie yen, that kind of thing. Because oftentimes if it looks good on one chart but it's not quite there, it may be good on one of those cross pairs. Always a good little tip. Okay, another thing, creating a trading system based on multiple entry criteria. So tonight we talked about double tops and double bottom kind of patterns, also channels. So that might be one reason that we have to get in a trade. We also have support resistance, a basis of all good trading. We believe it's very, very good. It's great because it means market psychology. It shows you, I guess, like commitment of the buyers or the sellers inside the market. Very, very important to understand that concept. Candle confirmations, as we mentioned, the engulfing candles and hammer / shooting stars. Fibonacci retracements are also great, and they're great with role reversal, and even some indicators. I mean, we really love things like stochastic. If you find a channel like we saw on that euro pound, and then you add a stochastic indicator and you look for oversold and overbought zones, it can be very, very good for your trading as well. But just try to keep it as simple as possible. Start with a base of a few ideas, and then build on that base, build on that core, and start to then expand over. Too many people, they put too many things on all at that once, and then they go, I need all these reasons. Your trading system at its core should be successful before you start to nuance it and start to refine it. And Ty, I think that's even a thing that we struggled in the past. We were always looking for what is the best base for our trading system.
Definitely, yeah, and really getting that that together is probably one of the most important things, because when you are scalping, look, you're not going to be able to get the stars to align on every single thing that you look at. There's no question about that, but you do need a base, and this is even this little simple system that we've got here. I mean, it's very basic, but you know, it can get the job done for you, because what it's forcing you to do is actually look for more than just a reason that you think it's going to go in a certain direction. Like a lot of people can just jump in and say, all right, I think it's going to go long because, you know, there's an engulfing candle, and don't look for any other evidence. Now, they may be right, but more than likely that's not going to be enough, because the fact of the matter is an engulfing candle in the middle of nowhere isn't actually worth all that much, you know, in terms of what the market's going to do. But an engulfing candle, say a bullish engulfing candle at a support level in a channel, or a bearish engulfing candle at a resistance level in a channel, is worth its weight in gold. And that's the difference. So, you know, with this little point system, you're forcing yourself to really check for a little bit more evidence, even, and you can do it very, very quickly, because once you know what you're looking for and you've got those points, look, you can print this out and put it on a chart near your computer. It's not overcomplicated, but you can make a very quick decision, because these things can be there very, very quickly. It takes 5 seconds to draw a Fibonacci retracement. Candle confirmations, well, you're just going to see them unfold. Support and resistance generally is drawn prior to you doing your scalping anyway. Most of the time you'll draw up your support and resistance zones prior to doing anything. So they'll be there for you to see, and hopefully all the world to see. And of course, double top and double bottom patterns, they just play out. So they're the things that you're sometimes waiting for, but they're the ones you probably want a little bit more confirmation on as well. But when 2 or 3 of these elements come together, your scalping attempts are going to improve, tenfold, because realistically, there's 4 or 5 times the amount of people and market movement actually trading in the direction that you want to go.
Okay, all right. So we'll go over to the Q&A in a minute, but one other thing that Tyron and I want to mention is that we've got a little thing called PressIK, which is part of our foundations course and advanced course bundles. And basically we also have something called the PressIK account builder. And I think this is something that's so powerful for scalpers out there. So if anyone wants to sign up, this particular PressIK account builder video and kind of concept of managing your money, you can go over to learning.fxevolution.com/p/PressIK account builder, and you'll be able to sign up there for free and gain access to that portion. So I think that it'll be very beneficial for quite a few guys out there. I mean, Ty, we love this stuff, don't we? I mean, this is even just this basic concept of how to manage your trades and how to manage your money and build your account is so powerful.
We literally had thousands of people do this account builder, and the response has just been amazing, because it really shows you how you can build an account even from small balances to a pretty reasonable level without taking ridiculous risk and doing all the right things. But most importantly, it teaches you to actually manage the control of your trades, and it makes you immune to the growth of your account by following the same rules. A lot of people come unstuck by trying to go too big too quick, or even getting nervous and taking their trades out early, mainly because they haven't been immune to trading the bigger volumes. The PressIK account building system shows you how to do it without basically taking any risks, and you seriously become immune to it. What I will do, I've had a few requests to paste it into the chat, so I'll paste it in there now so people can just click on it. But if you click on the that learning link, it's a free link, and you can go in there, you can do the course, and I think you'll be surprised at how quickly an account can grow. But most importantly, it's not just the money that's growing, it's actually your confidence that's growing in your trading systems. And that's really, really important, because as you get bigger, look, no one wants to be trading $100,000 and $1,000 accounts forever. Obviously, you want to be increasing it to a level where you can take trading to the next level, where it's going to become part of your earnings, if not all of your earnings, which a lot of people do take it to that level. So it's really, really important that while you grow your account and you grow your balances, you're also growing your confidence. Because, and I mean, that might sound silly, but you would be amazed at how many people fall over if they try to go too big too quick without becoming immune to what the market can do to them. So we really encourage you to get on that and check it out.
All right, well,
Also, I
while
saw a few
Tyron,
people. Sorry, before you say that, a few people have said that first link, didn't. Well, for some reason, was giving an error. So for the people who want to join us in the webinar starting in 15 minutes, where we're analysing the live markets again, but looking at the bigger time frames and going right through it, just click on the second link that I put in there. That second link is working. The first one, for some reason, was going to a dead page. So anybody having trouble, let us know. But that second link will get you through.
Okay, so one of the other reasons we love using the 20 and 50 moving averages is the way that an aggressive trend sticks to them on the pullbacks. So what we've got here is just got this Australian US dollar 15-minute, and you can see that this aggressive trend starts, it then pulls back, does a bit of ribboning, and then it starts again. Now, when it starts again, you can see that the first time it comes back and it hits the 50, then it comes back and hits the 20. When generally you see this type of massive quick sell-off, the 20 can act as very good scalping opportunities. So it comes back, especially when you might see candle confirmation. So again, you see something like an engulfing candle coming off this 20 in the direction of that aggressive trend. That's going to be actually a very strong scalp. And the great thing about that type of scalp is it's usually going to be over very quickly, as in the market will move fast. So if you ever see an aggressive trend, start to have a look at what the market's telling you. Is it telling you that it's respecting the 20 moving average or the 50 moving average on the way down? If it is, look for maybe a confirmation candle. In this case, if you're looking for shooting stars and engulfing style candles. And when that does happen, you can get involved, and it should be a very quick type of scalp. And that's one thing we do love as scalpers. If you're in and out of the trade within an hour or 20 minutes even, that's awesome. You don't necessarily want to be in a trade for 10 hours or something like that. It's not always preferable when it comes to scalping, and we understand that because we used to do a lot of it. So if you want to have more aggressive kind of entries, check out that 2050, have a look at how the market is interacting with it. Like here, it's really respected that kind of 50 a bit more, and now it's respecting the 20, but the 50 was respected. It probably will be at least partially respected again. That's the kind of concept that we're going with here. All right, Ty, well, I think we'll hand it over to probably a question or two before we've got to go to the next one. So hopefully everyone did enjoy tonight's webinar. Hopefully you got some great tips and tricks out of it. And hopefully you can also see that bringing together multiple reasons to be in a trade is the trick to being successful at any type of trading, if not just scalping. But I'll let somebody ask a question in the room, and we'll see if we can answer one or two. We've got heaps of questions we've answered throughout tonight. But if you have a question, ask it now for sure.
Let's have a look. So what do we got here? So
quite a few coming through. I'll answer this one just quickly. I have a problem where I get a lot of fake breaks and fake, I guess, roll reversals is what they're talking about. So to avoid that, what you want to do is use confirmation candles. Look for confirmation candles and look also for things like roll reversal. You won't have as many fakes when you look for confirmation candles. So that's why I mentioned the engulfing candle or the shooting star. It'll definitely help you out. Joseph, 20, 50, 200. And got a question here from Tom. Should the short-term 15-minute trade be in the direction of the longer time frame trend, say 1 hour, 4 hour, or daily? Will that be helpful? Look, Tom, that's a great question. And yes, it would be awesome if it was in the direction. It doesn't always have to be because you're in and out quite fast. But if you see on the larger time frame that you're trading in the direction of trend, so say like this euro pound, if we go to a daily, I think everyone's pretty aware that the euro pound's been in a bit of a bull movement here. There's quite a lot of bulls going on. So if we were then on our 15-minute time frame and we were saying, look, where's the preference of the break to occur? The preference would be to the buy side. We're probably hitting about the end of this kind of big bull run that's been on it, but that is the type of thing that you are going to. You generally see a bit higher statistics and a bit stronger kind of trade when you trade in the direction of the larger time frames. All right, guys. Well, hopefully we see you soon in about 12 minutes from now. But otherwise, we'll see you in 2 weeks. We've got another great webinar. I think it's about what the banks don't want everyone to know. So we've got a couple of little secrets that we'll be unveiling in that one. I think a lot about price action psychology. That'll be really good for everybody to attend.
That will also touch on a little bit more scalping strategies as well, because absolutely. And the thing is too, you got to remember when you are working with the against the banks, you're very agile. You can actually, it's very, very easy to move in and out of the markets where they can't. So it's really, really important to be able to be agile, and scalping does give you that, basically, that very, very quick in and out movement that banks simply can't do. So we're going to teach you how to work and maneuver in between them, and you will enjoy it. Everybody likes to take the banks, don't they?
All right, guys. See you soon, or see you in 2 weeks.